Okay traders, so on to the next one, which is the daily/4 hour. Now this is currently the weekly time frame as derived from the last video. Now it's time to get a little more savvy on the lower time frame. So what we've basically done is we've mapped out the most recent and relevant areas of price action. Now on the Aussie dollar, it looks as if this is a new lower swing high in comparison to this one and this one over here, as you can see directly. Now I'm going to make another video on this, but generally what we would tend to do is after you put your key levels on there, monthly, weekly and daily, you'll start to actually see the market as a refined, well, in a refined perspective in terms of what trend it is actually following. Now, to differentiate a bullish trend from a bearish trend, we are in fact going to be looking for, as I've already mentioned, higher highs, higher lows, lower highs, lower lows. And here on the bigger picture, it's quite apparent that the 7750 level, okay, capped the price once again. It capped it here as well, but the official high, okay, of this week in particular, in this pattern 1, 2, 3, was in fact 0.7834. Now, that is 84 pips away from the current highs of this tweezer top. So we have the tweezer top, we have the 3-pin formation, we have the 3-pin formation here, 1, 2, 3, and also this is a bearish engulfing. So this can give us an idea as to, okay, by firmly putting our key levels on there, which trend we're actually in, which can give us a bias for the day, week, or even month ahead. Now, alongside that, moving averages is where the moving averages come back in. They can give us a great insight into, again, which trend we want to follow, and which direction we want to trade in. So if I just look at the monthly, I've already gone through this on the first video in this section, the second video in this section, sorry, the monthly key levels. We are looking as if we are potentially going to cross over soon. However, what can often happen is the moving average can come very, very close to each other and bounce off. So we're still bearish technically on the monthly time frame, and we're also looking at the monthly candlesticks as well. You can see here we had 1, 2, 3, 4 spikes. Excuse me, 3 spikes. Okay, we could not sustain on a monthly basis above 0.7925, and one of the months actually spiked all the way through 0.8100. So you can see here 1, 2, 3, 4. No price closed above that on the monthly basis. Same thing here, 1, 2, 3-pin formation. Currently on this month, the month isn't over yet. It's a few days actually, because today is the 27th of August 2016. We are looking for a potential reversal back to the downside, perhaps, maybe. It all depends. This is currently, I would say, an indecisive candlestick with a red body, but we could come all the way back down here, maybe close as a shooting star, so it's one to think about. So even here we've had 1, 2, 3, 4, 5, 6 months of wicks rejections from 7750s and even lower than that as well. So we can take that into consideration. Then we combine that with the weekly. Weekly factors are telling us, and last week just actually closed, because today is Saturday. Yesterday's candlestick closed for the week was a shooting star. So we had tweezer top, shooting star, right off 7750, monthly resistance. Now guys, what we want to then do, now we've got the market broken up into a more or less refined viewpoint and selective piece here, okay, we're going to be focusing on this. We can then step down to the daily to add some more key levels. The levels that we're going to be putting on the daily in the 4 hour are going to be the most responsive ones, to be honest. Now for this, in the book, yes, by all means, I did in fact put in there, we're going to be using just one rectangle and so forth, but after some more testing since, throughout this year, the best method and best way to do this is actually just using the simple horizontal ray tool. So the horizontal ray tool, it should be set up, I like mine blue, and I like mine the thickest it can actually be. Blue, thickest width, alright? Style, you can have it dotted if you wish, or you can just simply have it, you can have it dotted, dashed, or you can have it just simply, okay? Now, what I like to do here, I like mine like this. So what I'm going to do is, what we're looking for with the daily and the 4 hour is more or less 3-pin formations, the points in which the market has rebounded from the most times, any candlestick formations as well. So what we want to do is always ensure that our crosshair is turned on. The crosshair is this here, okay, which maps out my date and time, and then also my price. So ensure the crosshair is on, and what we can do, we can just go take our time and line the crosshair up with certain highs. So this high here, this is a shooting star and a 3-pin pattern, 1, 2, 3. So that's an official high for me. we have one here as well. However, guys, what I'm going to just throw out there and mention, and this is something that's going to come with experience overall, is sometimes we can go for that one if we really wanted to. So what I like to do, see the 3 pins, 1, 2 and 3, I would sit it on the middle pin or the high wick of whichever candlestick formation we have in mind. So that one we have, that's the high there. Across here, okay, we have an average. And then here 1, 2, 3, 4, 5. We can see these wicks 1, 2, 3, 4, 5, which didn't actually bypass that level. But with this one, to be honest, we can keep it on there if we really want to. So that's 7722. Or I personally, I would take that off because it is relatively close to the monthly area of resistance. And I've already mentioned if we start to plot too many key levels of support and resistance, we are going to start. So yeah, that's just something to bear in mind and keep in mind. Okay, bear in mind. So what I would do is I'll probably deviate from this high here, even though it's a great point. Maybe focus on something even relatively midway from the weekly resistance and the monthly resistance. So once again, what we can do, we can get the horizontal ray tool. So I'm going to go for this one, and a lot of this also, guys, is trial and error. All right, and you will get better at this when your recognition of candlesticks does improve, and also when you start to spot this 3-pin pattern over and over again. Now this is a brilliant level, so we have 7, 6, 7, 9. So more or less for the monthlies, we're focusing on the 0, 0s to start with, and then the 50s, sometimes even with the weeklies. But with the dailies and 4 hours, it doesn't really matter too much. So why I say daily and 4 hour is because we can actually flick between the daily and the 4 hour time frame. A lot of the time, if you do start to spot the levels on the daily time frame, by all means, keep on the daily time frame. But on some currency pairs, it's always going to differentiate. We can, in fact, maybe move from a daily to 4 hour, but we'll get to that in a moment. So let's just carry on and see what else we can spot on here. So we spotted that one there, and if we look across, we have, boom, we have this rejection right here where the huge bearish engulfing is. We could even call this one as well where the bodies have failed to close above that level. Across here, we've come shy of it with this shooting star. And then here again, actually yesterday, this was from the FOMC announcement. There was a lot of havoc in the market yesterday. We spiked all the way up, hit that level, rejected, and we closed a lot lower. And this is also a shooting star pattern. Moving averages, I've just crossed over on the daily time frame as well, which could be an early insight into a potential trend reversal. Shortly, throughout the course, we're going to be going into the trend lines, but this is a trend line which now is potentially going to break, as you can see there. So this could be a bullish momentum, higher low, higher high, higher low, higher high, higher low, higher high, and significant high, triggering a reversal from our 7750 zone. So now, into the week ahead, I'm looking at Aussie, because not just on the daily do we have a shooting star, but we do on the weekly as well. So can you see how we can simply put these things together now if we have our key levels placed accurately and responsibly? So Aussie is looking to maybe come down to 7400. So I'm just going to take that off. We're going to come back to that later on. So any more key levels on the daily time frame? Right, if we go to the horizontal ray, okay, so again, I'm just going to float through. Maybe this one here. So I've spotted this. See this 3-pin pattern? 1, 2, 3. There's 3 wicks. Wick 1, wick 2, wick 3, mini one. I'm just going to place it on there, see how this comes in. So here we can see once more, we've had a rejection, shooting star, boom, rejection here, tweezer top, 2 wicks in a row, and then the price has fallen quite sharply from that zone. Here we also have a shooting star pattern, which is putting in a high right on that area of resistance. So it was support here, resistance here, resistance here. And over here as well, we've pinned straight to it. So this is looking, so 0.7493 is looking pretty decent, actually, as another daily area of support there. So 7558 to 7493, we're looking at around 60 to 70 pips until Aussie dollar could potentially fall and find some areas or some baseline in which it may just stall a little bit. Due to the weight on the higher time frames, though, we've already gone through with what the weekly's looking like, what the monthly's looking like, and now what the daily's looking like. I do believe in myself, Aussie dollar can cross straight through that and maybe revisit 7400. So I hope we're not even too far into the technical analysis in the course yet, but I hope things are coming together. Now, if we just go back once more, we don't want to overclog the chart and overcrowd it. Me personally, I know there's an area right here, 7150 from this base, because again, I remember when Aussie actually reversed from that base, so that would be one of my other levels, and maybe just one more. Again, just study with the crosshair, see what we can find here. So we've got a tweezer top right there, and we've got this point here too. I'm probably going to go with that one. So let's just zoom in. So we're using the rules, and if we don't spot something, we don't place it on simple. So what I've seen here, the catalyst for me drawing that on is wick 1, wick 2, wick 3. This is also, that's a bearish engulfing, this is also a doji, so I've just placed my level right at the top there. Over here we have congestion, and also, right, we spiked all the way through, and look at the accuracy on how this candle's closed below that level. Bearish engulfing, 3-pin pattern 2, 1, 2, 3. And then across here, we also have congestion. Now, yeah, so with that being said, guys, that'll be enough for me on the daily. That's enough on the daily. We're trading back and forth from these levels. That's not to say when Aussie touches this, we look for a reversal to buy. Well, we can. However, you always have to take into consideration the levels, okay, in which it's bounced from, the candlestick formations and the moving averages on the higher time frames. So this could be a potential lower swing high now in comparison to the last one on the weekly time frame. So a new low could be formed. Aussie can come all the way down here. That's not to say we're going to sell and then we're going to hold it all the way down here. It's given us an insight and a medium-term bias as to where this currency pair could potentially go. So guys, monthly, weekly, daily done. I'm going to go into the next video where I'm just showing you how to map on the lower swing highs and stuff, how to organize that, just to give you a little bit more structure to your overall bias. And then I'm just going to do a video where I'm going to just go through quickly the key levels on each one of the other 4 currency pairs that I'm going to be studying and gold. I'm going to give you the first two, on the monthly, explain it all in one video on 4 different pairs, and you guys can go ahead and go and build that and have a little practice. But I'll give you the first 2. You can practice by putting the monthly on, the weekly on, and I'm going to leave the daily completely up to you. Again, just so you can have a play around. But you will see the daily on the weekly breakdowns when I am pulling up those currency pairs. And then if yours are slightly different, you can adjust them so they are in alignment with mine. But yeah, I just want to give you guys a little bit of an exercise there as well. So key levels, more or less done. So let's go on to the next one. I hope that's cleared up so far for yourselves, and hope you enjoyed it.